Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to take you through the Forex market wrap. We're going to highlight the news that happened this week and some of the charts we highlighted in the week ahead analysis video. So diving straight in, what can we see? Well, we actually had, it was actually quite a light week in terms of data. What we did look at, or what we were looking at, was a couple of different things. We had the US congressional elections, which still isn't over for some states. So there's still lots going on with that. And then you've got the main news for the week, which was the US CPI data. Now, US CPI data month on month actually came in the same at 0.4%. However, we did see a significant drop to the core CPI data, which came in at 0.3%, down from the 0.6% previous. And then we had CPI year on year come down from 8.2% to 7.7%. So what does this tell us? Well, it tells us that inflation, which is the sort of main topic for the Fed at the moment, is slowing. Okay, so we're actually starting to see the fact that the Federal Reserve interest rates that they've been hiking so aggressively are starting to potentially have an effect on the rising inflation rate, or we should say now really the slowing of the inflation rate. Now the Fed's topic recently is whether they would hike 75 basis points or 50. Now, why would it be those two? Well, 75 is a significant hike. To be honest, 50 basis points is still a pretty aggressive hike. However, in the kind of grand scheme of things, this is where the market is now leaning towards for the Federal Reserve, because 75 basis points hike would have been seen as a very aggressive hike again, and I think we would have seen that if CPI numbers had come in a little bit hotter than expected. However, because they came in softer, the Fed now have the option to start slowing down the pace in which they are tightening at the moment. So the Fed did say that they would consider this regardless, because of how aggressive they have been recently. They wanted to give themselves some room to be able to hike further if needs be, so that the likelihood of a lower one at the moment was quite high. However, this CPI data almost confirmed to us that in the December meeting the Fed are likely going to hike by 50 basis points. So going into the US dollar index, how did it affect the dollar index? Well, we were finding support at the 110 handle this week. We were trading above the 110. We dropped below it slightly, but only back into these previous lows. We then traded back above. However, this was the CPI day. CPI came out. We dropped significantly to the downside. We've traded now below the 108 lows through here, which is really giving us the idea that sellers are now happy to really commit to start selling the US dollar. So we could see price continue to push even lower here, with the next sort of level of support being at the 105 handle, which was seen here previously. So I think if price, if we do see any kind of pullbacks in the market next week, probably will be met by sellers again. Going into Euro US dollar then, so Euro dollar's benefited from a couple of things. Obviously the dollar weakness that we've seen in the market, but also the fact that the ECB members recently have been hyping up the need to hike rates more aggressively. So are we going to start to see this kind of play where the ECB are going to be hiking rates more than the Federal Reserve in the next sort of meeting? So that would be quite interesting. So price, what we looked at the start of the week is whether price would trade above the 100 or whether we'd stay below this resistance level. Below this resistance level and a stronger CPI number would have seen euro dollar come to the downside. However, that wasn't to be the case, and instead what we've had was a break above the 101 handle, which would have invited buyers to get involved in the market, and now price is heading towards the 1.0350 handle, which is more than likely going to be tested Break above that would see price come towards these areas here at the 1.077.5 handle. So that would be quite interesting to see if we do break and trade through this key area here. Going on to New Zealand US dollar then. So we identified New Zealand US dollar for some upside this week just because the New Zealand dollar was one of the stronger currencies according to the strength meter. So I had the idea to potentially look at New Zealand longs this week. You may not want to trade it against the US dollar, but what we were looking for this week was targets of the 0.6 handle, which is exactly what we got. Price actually traded to the 0.6 handle, came back to our level of support, which we marked in at the 0 spot 58.70 before seeing price rally and break through that key area. So now price is trading above this. Next sort of level of interest would be over here at these highs, round about the 0 spot 61.50 handle. Finally then, we expected the price of gold to move higher this week, not only from a technical point of view, but a fundamental point of view as well. Obviously, there were murmurs that the Fed would slow down the pace of tightening anyway, which would have benefited the price of gold, which it has. You can see here we've pretty much straight lined ever since we've traded through the 16.75 handle. Price has really hasn't looked back. If we have, it's only been for a very short period of time before seeing that continuation. So interestingly enough, I think gold's probably now heading towards the $1,800 level. We're trading above the key highs at 17.30. So if price can maybe consolidate above the 17.30, there could be an opportunity for a run to the $1,800 highs. I'll leave it there. Thanks for watching the videos this week. I hope you enjoyed them. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.